From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for May 10th, 2017. In a moment, we'll be taking a look at the AUDUSD, the Australian versus the US dollar, for today's trade analysis. But first, I want to recap a couple of the suggestions made over the past few days. Starting here on the NZDUSD, New Zealand dollar versus the US dollar, we were looking for a short opportunity into resistance yesterday, which happens to be the yellow shaded area here in the middle of the chart. If I zoom way out here, you can see while we were under there, we were looking at resistance with a lower high underneath that yellow shaded area. So zooming it back in, we can see we took the sell. And this little red dash line might be a little hard for you to see, but there's a little red line here. Maybe if I double click on it, you can see the little white dots along that line. That represents where we took the short. That's from the trade manager. You can see that short right there into the 69.15 level. The market went down. Let's go ahead and measure how far it went down from here. It went all the way down, seeing about 30 or so pips of profit on the trade. After seeing 30 pips of profit, the trade manager took us to break even. The market came up, took us out at break even. So we ended up with break even, but we did see 30 pips of profit on that trade. Moving over to the US yen, another trade that I've been looking at. If I zoom it out to the daily time frame, you can see yesterday we attempted to get above this yellow shaded area right around the 113.90, 95 level. Happens to be the 786 Fibonacci retracement level, by the way, of this previous blue trend, high down to low. That blue trend sits at 786 there at 113.90. So we attempted to get above there yesterday. In fact, on the 4-hour time frame, we'll see we had candlesticks clearly above that 113.90 level. Came back down. I went ahead and took the long, now waiting for the buyers to step back in and send it back up towards the green shaded area as our target. So we're looking for it to hold within the trend, the red trend line, within the trend, hold the yellow shaded area, target the green shaded area in a similar fashion. And we spoke about this yesterday in the trade room, to what happened back here with this blue circle. If you see the blue circle, we got above, it came back down, and went back up again. So we need it to stay above the yellow zone if we're going to see it go to the green zone. 4-hour time frame shows that holding right now at the yellow zone. Clearly on the 4-hour, we're above the yellow zone. We're dipping back down into it now. We need it to hold here if it's going to turn higher. And our risk in this scenario, of course, is that it breaks. Oh, didn't mean to grab that. It breaks underneath the yellow shaded area. That's the risk, and then we look for a go lower. So at least at this point, we're in it. We're waiting for it to get back above the yellow zone, start targeting higher towards the green zone at the top. The risk is the breakdown of the yellow zone for the US yen. Let's move on over to the AUDUSD. A couple of things to think about here on the Australian dollar. Of course, we have been in a downtrend. That's the black trend line. That's clear here for the Australian dollar. We've seen several surges lower with news for Australia over the past several weeks. We've seen it surge lower, reaching yesterday and today the low down around the 73.35 level, the purple shaded area. Back here with the blue circle, it shows us support there before, so that's not too surprising that we found support there again. Continuation of the downtrend would have been a breakdown of that purple zone. Let me change that so it's easier to see to the black color. So it would have been the breakdown of the purple zone, continuation of the trend. Didn't do it, found support, bounced off of it, and now we're sitting underneath the blue zone. Blue zone is our resistance for the day today. As long as it's underneath there, there's potential for it to continue the downtrend, and the risk here is that it breaks back above the blue shaded area. One last thing here before we move on, Fibonacci of the red trend from the lowest low to the highest high. So you take Fib from the lowest low, highest high of the red trend line, you find the 0.618 Fibonacci retracement level inside the blue shaded area, right there in the middle. So that gives us another clue to what was support here, but also the fact that we're underneath it gives us a clue to a breakout lower. Underneath that blue zone, underneath the 618 fib, may see the continuation of the downtrend. Let's take it down to the 4-hour time frame. Now, of course, over the past few days, going back to Friday, we studied the black circle here and the potential for reversal, potential setup for a head and shoulders, inverted head and shoulders pattern, just like what happened here at the blue circle. We actually did take a buy there. It failed as the market had news out of Australia that caused the market to break down through the blue zone. If it had been positive news, we would have seen that trade come to profit. But failed that buy attempt there into the blue shade area. It did bounce off it the first time quite a bit. Now we're back under underneath there. Those supports now acting as our current resistance, along with that 618 Fibonacci retracement level. So for the day today, what I'm looking for is for the market to hold inside and underneath that blue zone. The risk, of course, is that it breaks above the blue zone, and we'll look to target back down to the last support, the purple zone, or lower within the direction of the trend. What are we going to need to see? We're going to need to see the US dollar have a strong move. We need a US dollar positive move. That's going to send this lower. If we see any negative movement again for the Australian dollar, we'll send this back down. Any negative movement for the US dollar or positive for the Australian could break this blue zone. So we want our stop losses at appropriate levels. I think clearly up here around this last high becomes an appropriate level for a stop loss. If we sell it inside the green shaded area, you're looking at about a 40 to 45 pip stop loss into that area. I have already taken a short here into the 73.80 level. You can see the sell going. I need to apply my trade manager, which we do this in the trade room quite often to our trades, applying the trade manager. I'm going to put a 45 pip stop loss. That sends the absolute max loss, becomes my stop loss with the trade manager, and now that's been applied to my trade. So I have a 45 pip stop loss. My short is at 73.80, and I'm looking to target back to 73.35 or lower for the Australian dollar in the direction of the trend.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.